Hello, my beautiful people. Welcome to Stock Market Tea of the Week. Now, for all those people, if you're new here, let me get an opportunity to introduce myself. My name is Paris Smith, and I was able to retire myself from the 9 to 5 at 24 years old, and I was able to do that through trading stocks. Now, I was able to do this as a complete beginner. In fact, I produced 6 figures worth of income my first 6 months trading. And the cool thing is, let me tell you the cool thing about the strategy that I trade. I only trade once a week. And it takes me less than 3 minutes. It's absolutely wonderful. The income that I make is consistent and reliable, and there's no need for any charts, no day trading, and no indicators. So if you like, baby girl, I need to learn that. I need to learn that strategy, because I'm going to promise you have never heard about this strategy before. I need to see you at my next free stock trading masterclass, where you're going to learn all about this strategy, how it works, and more. So the link to register is in the description of this video. Definitely secure your seat. Okay, secure your seat and make sure you show up on time. Now, today, stock market tea of the week, I'm going to be breaking down the market from Monday, March 4th to today, March 7th. And if y'all in here, y'all excited, I need y'all to go ahead and start flooding the comments, flood the chat with some tea emojis. Y'all know what to do. Go ahead and flood the chat with the tea emojis. And if you watching this as a replay, I need y'all to comment replay gang. And of course, put a little bit of teacups after you go ahead and comment that replay gang. All right, y'all, let's go ahead and get started. So first of all, y'all, this past week, it was a roller coaster. And if you own any tech stocks, I know you are feeling it. And let's go ahead and spill the tea on what went down from March 4th through March 7th. And I'm going to give y'all a quick recap of the market. Of course, y'all will know the market performance, the biggest headlines. Y'all know I'll talk about the biggest headlines, the economic updates, which is very important, and of course, what to look for next week. So y'all make sure y'all go ahead and like the video, like it, and subscribe. And we about to go ahead and get into it. So now, first thing first, what happened to the market this week? We're gonna do our market performance recap. So what happened to the market this week? Just to let y'all know, right now we experiencing a little rocky ride. A little roller coaster, little ups, downs. We up again, we back down again. It's just a roller coaster. It's up and down. And I just want you to know, if you are trading in this market or you investing in this market, it's going to require some patience. Okay, some patience. And 2, let me tell you why it requires a little patience. Because we don't know what Uncle Donnie got planned. We're trying to figure out what Uncle Donnie trying to do with his policy changes and things. Because at the end of the day, that's really what's moving the market. And so if we just have a little patience for this season of uncertainty, we'll get through it. And here's one of my biggest advice for, if you invest in this market. Stick with the stocks that are fundamentally strong. Because, baby, let me tell you something. Come here, let me tell you something. Let me I wish I can get up there. I can't. But let me tell you something. If you pick the stocks that are fundamentally strong, it's dipping right now, okay? It's a little pullback dip right now. But wait till Uncle Donnie get it together. That market going to come back up, and you're going to be so happy. that you chose a stock that's fundamentally strong because it always performs every single time. Now, I'm not a financial advisor. I'm just simply sharing my knowledge in education. Okay. Anyway, all right. Quick summary index for the index. So we have the Dow Jones 30. Y'all know the Dow Jones 30. The 30 companies that's inside of this exchange has closed at 0.88%. So it's down a little bit. 0.88%. Not exactly 1%. Still a little opportunity there. The market been up and down all week, so it's not too bad. Then we have the S&P 500. Y'all know the S&P, that's 500 companies that's a part of this exchange. And so far, as of today, March 7th, it is down 1.15%. So 1.1%. And then we have the NASDAQ. Now, the NASDAQ it's 100 companies, but the NASDAQ is heavy, is weighted very heavy with the tech stocks. So it's down about 1.5% this week. And the market, when the market closes, it's rallying a little bit. It's trying to come back up, it's trying. But the biggest losers this week, it's the tech stocks. So y'all know last week we talked about NVIDIA. And y'all know NVIDIA is like a heavy hitter, in the exchanges. Their percent of their weight is at the top. Okay, I'm gonna get the exact percentages for y'all next time. But anyways, for the big exchanges like the NASDAQ and the S&P, NVIDIA at the top. And and when NVIDIA go down a little bit, the market feel it real bad. So the biggest losers, the tech stocks this week, it took a major hit. And then y'all know the AI stocks, it slid a little bit, took a little slide, a little bit. But the biggest winners, y'all hear me? The biggest winners this week was the defensive stocks. Now, y'all know, well, if you don't know, I'm going to tell you now. In a market that's like this, is up, is down, it's a lot going on. It's also good to diversify. It's good to diversify into the defensive stocks, the defensive sectors, like the utility, and then you got the healthcare and stocks like that. So the defensive stocks held up this week, which is pretty awesome. Now let's go into what influenced the market this week. So we about to go ahead and get into why did the market tank? Why did the market tank? Let's get into it. Okay, so here's the major factors and why did the market that moved the market. The major factors that moved the market. So y'all know we got talks of a trade war. The trade war talks is back on. So we have new tariffs on China, Canada, and Mexico. And y'all know tariffs, it actually took effect on Tuesday. It was midnight. On Tuesday. Listen, I was up. I was counting down because, this is what I like. I like to keep up with the news to know how is it going to influence the market. And so Tuesday midnight, Uncle Donnie decided to go ahead and let the new tariff policy go through. And they got 25% on Canada. We have 25% tariffs on Mexico, and then we got 10% on China. And so China said they ready. They said they ready for whatever war. That's what China said. They said they ready for whatever war, and then they said whether it is World War III or trade war. Let me take a breath and take a sip of my tea. Well, well, that's that. And then, so we got the trade war talks going on right now. And let me just read this article real quick. Let me read this article really, really quick. It's on, this is MSN. If you ever wanted to take a look at the article, it's MSN, and the article is Trade Stress Slams U.S. Stocks. It says, MSN, trade tensions battered markets again on Thursday. This was yesterday. As traders and portfolio managers grappled with fears that policy volatility will significantly hammer U.S. economic performance. Declines were broad-based, with tech and financial stocks that took some of the largest loss. The dollar weakened, heading for its lowest close since Election Day and its worst 4-day stretch since 2022. Let me just say this. So we have, y'all know, when there's news of like new policies, especially tariffs and stuff like that. And then of course, like rumors of trade wars. It's just, the market don't like that. The market don't like it. The market likes stability. So we need them to get it together with this tariffs and trade stuff. But just because of all of the policy stuff going on, the NASDAQ actually is headed towards a little correction. They in correction territory. Basically, correction territory is when a stock drops 10% from its recent high. And they said that it was his worst. It was his worst since 2022, and they really talk about NASDAQ, probably another sector, but we know it's NASDAQ. It says Dow Jones fell more than 1% in the afternoon trading. This was yesterday. The S&P dropped more than 2%. This was yesterday. The NASDAQ fell nearly 3% and was on track to close in correction territory, making a decline of 10% or more from a recent peak. It says investors have been wrong-footed by frequent changes in the White House tariff policy. And it says which many contend are bad for markets because they introduce further uncertainty into business decisions. U.S. import duties took effect Tuesday at midnight. It was Monday night. It was 12 o'clock a.m. when the tariffs. Now, we thought Uncle Donnie was going to tweet something saying, never mind, hold up, wait, not yet, next month. But Uncle Donnie let it go. He did. So now we got tariffs. And so U.S. import duties took effect on Tuesday, surprising some market watchers that have hoped that Uncle Donnie's tariffs talk was mostly bluster. I don't know what that means, but anyway, let's continue. So investors, they are currently worried right now, worried about the supply chain disruption. So that's that. That's one of the biggest things that influence the market. Now we're going to go to the second thing that influenced the market this week. So now we had a tech stock bloodbath, unfortunately. And y'all it's just because Nvidia last week had their earnings and they did real good on earnings, but the market was like a little scared, a little shaken up a little bit because of what's going on in the market. And so Nvidia dropped 8.5%, which is real crazy. Although their earnings was real good, it kind of hurt my heart a little bit. But anyway, they said that the AI stock bubble, they say, is it deflating? Is it? I don't know. Let's see what Yahoo Finance got to say. So Yahoo Finance says that Nvidia stock fell at the time was 5.7%. This was yesterday on Thursday. Leading other chip makers down as fear over AI demand continued to weigh on the sector. The drop puts Nvidia shares down 18% year to date. God, dang, Nvidia. It's Nvidia. God, dang, 18%. All right. It say, with the AI chip maker giant seeing its worst monthly performance in February since June 2022. And this is what the analyst has said. He said it's been a rough year for Nvidia so far. He said the stock, along with other AI semiconductor stocks, peers, has suffered, battered by a storm of growth fears, supply chain noise, and tariffs, regulatory risk. Anyway, next we have the consumer spending slowdown. So y'all know consumer confidence right now is dropping. People are saving the monies. They're not spending the monies. And y'all know we need people to spend in the economy. That's how the economy grows, when consumers are spending the monies. So that's another, it's a little slowdown right now. And then number 4, okay, another impact to the market this week. Y'all know that we had jobs reported yesterday, Thursday. We had a cool little conference on the job numbers. And okay, so I'm gonna go ahead and say this. 151,000 jobs was added in February. And it's slightly below the expectations. Not bad. It's just slightly below. But when job numbers not up or a slight increase, the market don't like that. So I'm trying to tell you, the market bipolar right now. It's a lot going on. Jesus is coming back. It's a lot going on. We got the tariffs. We got Uncle Donnie with all the executive orders. We have, what else? We have trade war rumors. We have the whole job shift stuff going on with the government. We have war in Ukraine and Russia and Israel and y'all know the other one, Hamas. We got a lot going on. It's a lot going on right now. And then, all of this just influenced the market. We got consumers scared, spend money. There's a lot of uncertainty. Jesus is coming back. But anyways, let me continue. So when the job numbers is a little, then it'll be expectations, a little below expectations. The market do they little dip, they little slide back, but so that's that. Now let me tell you what Uncle Donnie said. Let me tell you what Uncle Donnie then said. So Uncle Donnie today, during his remarks in the Oval Office, this was about a couple hours ago today. He did his special appearance in the Oval Office today. And he said that the goal is to remove government roles to strengthen the private sector. That's what Uncle Donnie said. So, yeah, I know it's a lot of layoffs and stuff going on right now. And, all of this news influenced the market. So one good piece of information, market goes up, it's looking real good. One little piece of negative information, maybe, reports or something, not really looking it's looking market could fall down a little bit. But we gotta figure out, okay? We just gotta figure out. Let me just tell you this too. If we weather the storm, okay, the waves real choppy right now. But if you just hold on to your boat and stay patient and try to see, we just gotta see what's going on and what's gonna happen. The upside. Uncle Donnie today also said it. This will be a disruption for a little bit with all the things like the government jobs, and he wants to strengthen private sector and the tariffs and stuff. He said it's going to be a little disrupt. So we just gotta put your life jacket on because you might fall in, or your toe might dip a toe in the water a little bit. Just come on, get back in the boat. It's a little choppy. Hold on. But we just got to weather the storm. And just see what's going to happen. You just got to see. Okay. All right. So one of the really important meeting happened this week. This was the we're going to get into like the economic and policy updates. And so the next segment, what the Fed's saying. And I'm going to tell y'all the key data that was released this week. So we got the inflation data, the inflation update, and then we got the consumer, the whole consumer thing. So let's talk about the inflation first. Now, inflation is up 2.6% year over year. So it's down a little slightly. It was as high as 2.9 in December of 2024. So it's down by 0.3%. But, the market was kind of hoping for the Fed cuts. Y'all know what that means, right? The interest rates and all the other things. The Fed cuts. But Powell said, Powell said, not yet. He said, we're going to hold off for a little bit. He said, not yet. Now, we're going to read a little article from Reuters. If you want to read the article from Reuters, he's talking about March cuts. It's called Leaning Against March Cuts. All right. So Reuters said, the Federal Reserve Governor Christopher Waller said on Thursday, he leans strongly against a rate cut at the Fed's upcoming policy meeting this month. Although he reckons cuts later in the year remain on track if inflation pressures continue to abate. Somebody let me know what abate means in the comments, because I don't know what that word means. Anyway, in this counting and easing at March 18th through 19th Federal Open Market Committee, Waller indicated he simply will not have the inflation data in hand to know whether cutting was now a 4.25 to a 4.5% federal fund rate range is justified, especially aimed the heavy uncertainty created by Uncle Donnie's trade agenda. So basically, he's saying inflation is not doing too good. It's not doing to what they are expecting, but they got to see inflation calm down a little bit, and they got to see how this storm with the inflation with the tariff trade thing, we got to see how that's going to look first, with inflation and things. And then he said we'll see later this year if we're going to do a Fed cut. So their next meeting, I believe, is on the 18th. Well, they have another committee meeting on the 18th and 19th of March, but he said he's not going to have all the data, so he said they're not even going to talk about it. So we'll see, though. We'll see. Every month they have their meetings and stuff, so we're going to see. But anyways, he said that the March rate, the March Fed cuts is unlikely, is what he said. And he said, but later this year, it's still on the table. It's still on the table. And that's all. They just weigh in the tariffs and the inflation risk. That's all they doing. So, but it did come down 0.3%. Okay, 0.3%. So that's good. That's we all right. We all right. Now, let's talk about it. Let's talk. Where do we go from here? Where do we go from here? So here goes some key takeaways, okay? Some key takeaways from this week. So y'all know tech stocks, it took their major hit. But is it a buying opportunity? Let me know in the chat. Talk to me. Is it a buying opportunity? And then we have inflation is cooling. It's cooling, but not enough for Fed rates to, Fed rate cuts just yet. But it's cooling. And then, we're market watching for tariffs updates right now because they just worrying a little bit about trade wars. They feeling the heat a little bit, a little nervous. So this is what we're watching for next week. This is what we're watching for. We got more Fed talks. So we're going to be looking for the updates when it comes to the Fed talks and stuff like that. We have inflation reports on March 12th. Okay, we got the official inflation report for March 12th, which is going to be really interesting to see. I'm interested to see what's going to be on that report. This is literally the market moving data. Okay, the inflation report, market moving data. We also have some corporate earnings coming up this week, and let's see if the AI stocks can recover. Yep, let's see. Now I want y'all to do this. This is what I want y'all to do. Need y'all to take a breath. That was a lot. It was a lot to unpack. The market has been crazy. The markets have been crazy, but next week it's gonna be a big week. I want to know, what are y'all doing? Are y'all buying the dip, or y'all sitting on the sideline? Let me know what y'all doing. Let me know. Drop a comment and let me know what you're doing in the market this week. And if you want to learn how to invest in this market or any other type of market, also trade in this market to make a consistent, reliable income, I need to see you at my next free stock trading masterclass, okay? All this information I got up in this dome right here, I'm teaching you, okay? So you can be confident in markets like this and in markets that's not like this, Yeah, or markets that just stays the same. You will be a confident investor and a confident trader. So I need to see you there. Let me take a sip. Y'all know what I'm going to do. I'll be up. I'm clocked in. Okay, I'm clocked in. All the meetings, all the latest updates in the market and policy updates. I'll be keeping my eye on Uncle Donnie and all of that for you. If you got some value from this video, I need you to go ahead and hit a like for your girl. Subscribe for next week's tea. And I'll see y'all next time. This was good. Bye, y'all.